The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Wow, what a rally. We're going to look at that on the S&Ps. First and foremost, we're going to take a look at that. We had a little bit of an issue with the scanner yesterday morning, so we were not updating for a little bit, but we've got all that fixed and got a killer alert system we're putting in that was causing a couple of those problems. And Joe from Scotland, if you're listening, that's on deck, should be out to you pretty quickly. So when things are happening in your custom portfolio list or any of the manual filters or things like that, if you want, it will alert you. So here's the S&Ps. Everything back to normal here. Talked about a possible volatility play. Didn't know which way this thing was going to go. I was a little bit more leaning towards the short side. All breaths have changed positive. The globe, I was kind of gazing at that this morning. When it comes to net breath calculations, I'm going to show it to you. Here we go. So here's the daily, here's the intermediate, here's the 4 hour, which is my favorite time frame. Here's the 1 hour. And you've got a couple of things not exactly cooperating. The Shanghai, China has devalued its currency against the dollar to the lowest value since 2011. We're going to talk about that a little bit. And let me either raise my chair or lower my camera here. Or sit up straight. That would probably be a good idea. And going back to our daily and looking at the S&Ps and the NASDAQ, let's just pull up the S&Ps. As you can see, the cell structure across the top here, we're above our daily, even though, I personally was leaning a little bit more towards the short side. The housing number came out, and obviously this thing went to the moon. I actually tried to pick a battle around this 2073 area, the unfair highs on the daily. Thought we'd possibly slow down. Again, that's what stops are for. But the long-term view on this, we talked about this kind of religiously back in this area, was to try to buy some calls and puts and wait for that volatility explosion or, just big-time price movement. Now we've gotten outside the 2073 area. We've actually come back this morning. We closed above that yesterday. In fact, let me just point out what the close was. The close was 2075, still in the noise area, but this morning we've come back and retested 2073 and moved higher. So, again, not the best place in the world for shorts, but if you're looking at trying to pick some battles, this is our weekly inside profile here on the S&Ps on the June contract. You've got an inflection point 2083. Again, I got stopped out. Put a pretty tight stop above 2073 yesterday when we had that initial run up. It would have been nice to go long around 2050 and some change, but picked a battle there, got stopped out. This is kind of day trading lingo here. And that's what stops are for. But you got a pretty serious inflection point here weekly. Remember, you don't have a lot of cooperation here from the internals. I will admit, looking at the breadth calculations that, we're long-term and intermediate-term internal positive here, have had some pretty big expansion numbers on the 60-minute breadth. The internals kind of getting a little overextended here. There's 326 stocks trading above profiles and 36 below in the S&P 500 on the short term, and that's actually going to probably change even a little bit more as some of these stocks start to open. But 2083 is the big number. We've gone a long ways pretty quickly here. This doesn't have to stop But again, if you've been long, I think this is where you got to take some weight off the table, bare minimum. And if you want to pick some battles on the short side, you definitely got an opportunity right now. We're trading 2085 right now. We've been as high, we're trading 2083 right now. We've been as high as 2085. This is the June contract in the S&Ps. So, and remember to put your stops in if you're going to play like a trading opportunity around those weekly unfair highs. Here's what the 240s look like. So nothing up here really to give you any more leverage on a shorter term time frame. You just got a long term inflection point sitting there. Let's take a look at the Shanghai. Based on China currency manipulation techniques. Gotta love it. If you guys ever go to China, it's a weird place. They've got some cool spots without question. Very scenic areas in some places, but it's a weird place for me. Everybody seems, I don't want to sound, this is not, hopefully not a bad comment, but it seems like, everybody is seems soulless. They're just, to me, kind of walking around and not, there's no big excitement. There's no big depressive kind of attitudes here when it comes to being over there. But it's just everybody's kind of on a track, and it's wild jumping from the land of drama, the United States, to go over there, and there just doesn't seem to be any drama. So 27.97, big number on the daily, 28.52. Big number down below 27.42. We're still kind of just churning around. I don't think the U.S. really gives a hoot too much about this unless it starts breaking down significantly. And that breakdown below 27.42 would be something it would the S&Ps would probably just kind of look at, just be a little alerted to it, I guess, these days. Notes, again, this is astonishing to me. Big number 129 down below still. It's hard to believe these things are not selling off more. So as we look at this, we're going to take a look at gold. Talked about 1238 yesterday. That didn't hold. Again, that's what stops are for. Where's the next level down? It's kind of amazing that we don't have any weekly new profiles attempting to appear on gold. Let's go into the futures section. Here we go. So we're below profiles. Picked a battle yesterday on that daily unfair low. That's a great example, again, of what stops are for. So now we're just kind of in a waiting pattern. I'm not a big fan of going short gold here. We're just waiting to see if we can get some new information to try to lean against on possibly trading this from the long side. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Gold, we're finishing up there. Really, last thought on this is it's really in no man's land down here. Nothing to really grab onto to play defense. I'm kind of surprised that the weekly still hadn't tried to have a new profile attempt to appear. That's pretty bullish on the long term. But again, you know, I gotta call it quits when I have too much pain below an inflection point. So that's what happened yesterday. I've made some really good trades on gold lately, but the law of averages started to creep in yesterday. Let's take a look at crude really quick. We got to cover this one. This has been a little shocking to me. This thing continues to go up. But you know, good economic news, go. Housing starts. I mean, it has some impact on some things that have a feel for good economic conditions, higher crude prices. Let's take a look at this. Now we're sitting above 48.97. We haven't closed up there. So again, you know, this is kind of a wait and see here. I'm not a big fan of going long crude right now. We had the Goldman Sachs news, which was the fundamental anti-advice. And we're going to take a look at the XLE. We're just going to look how some of these things have acted. You know, this is just nothing outstanding here. 25th, 66.74 pre-market. You know, here's the XLE. I'm just not looking at this as I'm not convinced that oil is a great long play right now. I'm just looking for an opportunity on the short side, really. We're going to take a look at a couple of currencies really quick here. Okay. Japanese yen. We talked about this crowding, this 110.40. Still the case. You got 110.35 on the daily. Any breakouts above there? We didn't even get down to support 108.46, 47 that we talked about. So we're looking at possible daily close or weekly close above 110.40, and then being able to play defense against that. But right now, you're bumping up into resistance again, and I'm not a big fan of going short this. So the long opportunity didn't quite get that pullback we were looking for, 108.46, 47. Now we got to wait for a breakout or a pullback to that area. Australian dollar kind of ramping up a little bit. Nothing to write home about. The euro trade, we talked about support on this POC around 111.40, 111.43.44. So we're kind of in that vicinity right now. Here's the daily. Again, you got a big inflection point here on the weekly to pay attention to. These are all in the scanner. If I go into the Forex section and I go to the euro, there you have it, 111.43.44. So we are on the charts. Here we go. We're sitting right at that inflection point. And let me just show you in the landscape view right there. Okay, relatively wide profile coming down to the top of the peak of the profile, and that's where we stand. All right, real quick, Canadian dollar. A little bit of a stall situation here. I'm going to go back into the scanner really quick, go to the Forex section. There you have the yellow peelback happening. So new supply area happening there. I think you've got a kind of a no trade right now. You've got support around 130 on this. That's the POC on the weekly and the top of the profile on the daily, but we could have a new profile appear today, which will be kind of a higher support area. Kind of amazing how this has become devalued. I mean, obviously a lot of oil companies have gone bust, some of them Canadian. But again, we looked at this as a leading indicator to trade oil in the past, along with that XLE, and I just don't see the leverage on the long side trading crude from the long side right now. Okay, let's go back to my futures side here, and I want to pull up, XLF. I want to see how this acted yesterday in that massive rally. So now the XLF is up into 23.58, top of the profile on a weekly. This morning we are trading 23.65. So again, you're at a weekly inflection point on the S&Ps. You're at a kind of an unfair high on the XLF. It would be more of a trading opportunity here. We're going to go into the XLF really quick, look at the internals. We're going to see that that's kind of the top of the heap when it comes to breadth positivity on our intermediate time frame. We've talked about, if you're going to trade the XLF, you've got some long opportunities in here and some short opportunities drilling down. Goldman Sachs, let's see how that little puppy acted. Was sitting kind of on the precipice there, and we had a little bit of a rally. But again, this is the type of stock that's showing itself that, hey, you know what? I'm still in a downtrend. I'm kind of empathetically bouncing here as the market rallied, 220 points yesterday and another, what are we up? Probably another 80 Dow points this morning. This thing really not wanting to get going here. And, a lot of times these things are kind of arbitrageable events that even, a lot of programs are buying this ETF Eternals, especially, like a Merrill Lynch desk in Houston. We deal with those people. Their whole gig is balancing commodities and underlyings with the ETFs and trying to, make sure that that they're making money for free. No, seriously, they do a lot of balancing on that desk. So a lot of times these things will just kind of lift because they have to be bought because the ETF is being bought. So Goldman Sachs, again, not showing itself very well here. You know, we looked at this before, HCP. This is an ugly situation. You got a great chance to play defense on this if the market comes back above 33.59. Man, this is cool. And a new profile yesterday, 32.79. So you got some really cool resistance here on this one. If you're looking for something that just doesn't seem to want to, be a market player right now. When we come back, we're going to look at the some of the FANG stocks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So looking at these S&Ps again. Wow, that's a daggone amazing move. But again, we're up into a weekly unfair high. We may move higher, but again, you've got a major resistance area, a weekly unfair high right now. And if you've been long, you might want to think about taking some off. We did a really cool move this morning. We got closed above the daily. We came back and retested. So now we're at another possible, and it's just amazing these things are on all-time highs again. You talked about the notes a little bit. We're going to look at Netflix here really quick. All right. So, weekly move, 96.18, going to be big support on this now. But again, looking back at it, not the rosiest scenario cooperating with the markets. I'd rather see this thing kind of pull back and get back down below that weekly unfair low and then be able to kind of trade it down to 88.35 again. That's my thoughts on Netflix. Again, just kind of empathetically cooperating with the market right now, in my opinion. Apple, a little bit different story. We talked about now we have to wait until 98.64 is approached and hit. Let's see where we're at this morning. We've reached a high of 98.95. So we have gotten into this unfair high. We backed off. This is what we were looking for with Apple. You've got a little bit of a collection area up into 99.72. So, this is all in the scanner. You got to be able to say uncle probably above 100 on this one. I'm still looking for this to have some issues on the downside. We've caught this pretty well all along the way. I mean, this has been one, the big breaks happen. You get some trading opportunities around these particular inflection points, and I think we're kind of in that scenario again. You caught some really good moves on the downside here, and now we're kind of rallying back up to be able to hit this thing again. Facebook, let me guess here. Yep, up. So, talked about not shorting this thing. It's actually, here's the weekly on Facebook. Massive support at 113.64 now, up into or down into 113.55. Some new profiles. Even though this thing is kind of edged down as far as profiles go, it looks like, it's really, this is not the stock to short. I don't know anybody out there who's actually short this stock, which is kind of concerning for longs. Usually you want some people shorting the stock. Let's take a look at Amazon. All right, so looks like pre-market, we got a print. Man, this is like trading crack now, 707. Here we go. Long term, again, we crossed some borders at 651, went back and retested. Again, okay to be long, not okay to be short. Here's the scary what this company can do by playing around with a couple of percentage points here or there. 695.87, that's support on this right now. We talked about that last week. New profile, unfair lows, not exactly acting that well relative to what the market has done. But again, trading 707 pre-market. That's your kind of stop area below 695.87. But the more important thing here is I think that, if we get a little bit of a break below 695.87, we kind of started to have that happen the other day and then got quickly back in the box. I think you've got to look at this from a sheer trading opportunity. You may be able to kind of retrace a little bit farther down, because when this thing starts breaking below these profiles, market's at a high right now on the weekly unfair highs. You could get a little bit of a drift down on this, but again, the long-term trade, do not mess with this. Do not dismantle this long-term trade if you're a long-term investor yet. This is incredibly powerful on the long side. Okay. Going to take a look at a little oil stock that is, again, this is something that we talked about months ago. But again, this profile appearing below SWN, I love how this thing is really defending these unfair highs on the daily at 1146. Again, it's a great little stock to play defense on, and not exactly outperforming the sector. But again, I like how this stock is acting. We're going to go back into the scanner really quick, and we're going to go into that indices heat grid for just a second here. And we're going to take a look, just kind of drill down. A lot of these indices, without question, follow the U.S. action. But as we look at these, a couple of things also with what's going on. Saudi Arabia, the exchange has had an incredible run. I'm going to show this to you. This is our weekly. We went from, this thing has rallied 15-20% from the lows recently. We're having a little bit of a, let me just get this so you can see it. We're having a little bit of resistance against these weekly and for highs. This is something else. It doesn't have me super excited about oil as it continues to climb. A lot of the stocks on this sector, and we don't talk about this a lot, but a lot of stocks on this index are without question oil related, and this country is it's the Mecca, for Islam and for oil. So I don't see a lot of indications that oil's going to head much higher right now, and I've said that since 47. So we're trading almost 50 here now. So again, I think the risk is to probably be long crude. This Saudi thing is a decent indicator. Always has been, actually. And you can get it right in the scanner. All right, so we're going to take a look at a couple other stocks. We're going to take a look at McDonald's really quick. This is one that defies my logic. So here's the weekly, here's the long term. There's that kind of reversal, that's what you really want to see, that close above and then open up, go higher, and close below. These are great trading opportunities when you see these type of chart actions and you've got all this information in the scanner, and then you get that retest up into that area, because these are things you can lean on. What do you do with McDonald's now? I think we still can explore down to 119.67. That's about 6 points lower. You've got resistance at 125.49, POC on the big weekly, and unfurl on the daily. So if we can get a little bit higher on this, I think you can trade this, and we actually are opening a little bit higher this morning on the short side. Have it explore down to 119.67. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We're going to take a look at the treasuries again. I'm completely shocked that we're still trading up like this. That's got to be some kind of sign. 129.02, big number for the treasuries. If we bust through there, the XLU is might have some issues. That's a treasury breakdown on the 10-year. And I've been a big fan of kind of playing this sector. It's the bottom of the heap right now when it comes to looking at our ETF profile heat grid and that net breadth calculation. I had a little bit of an edge up yesterday, but mixed bag, really one of the only mixed bags. The Staples, another one. People are just kind of in a thirst for like euphoria type. The train's leaving. Utilities are a dividend play a lot of times. So again, right now, keep your eye on the 10-year. This thing really, I think, still, there's something to be said about the 10-year staying up like it is right now in the face of all the, people thinking we're going to raise rates 7 times in a row, things like that. There's a lot of things other than the Fed going on in the globe right now that could affect us. Let's take a look at the healthcare sector. This is one, got some headwinds, not exactly similar chart as the financials, but 70.82 on the healthcare sector. We're trading, actually almost traded 782 yesterday afternoon. I don't know if this is real. Nope, no prints this morning, but you've got some resistance areas here on the healthcare. If you're going to trade this from the short side, looking at those S&Ps at 2083, look for ones on the internals into the scanner. Let's just kind of pull up the healthcare sector really quick, and there it is. If you're looking to try to, bang this, there's some opportunities here on the short side that might increase your odds. Here's one, MNK. Anything below 58.60, you're going to be looking at that as a decent opportunity here. Not participating much, this one. Man, Humana, wow. Let's see. Yep. That could be something interesting. Top. We don't have my favorite setup. Let me see what my favorite setup is here. Daggone it. I love to see these belows on the weeklies and rallying up to the top on our dailies. Daggone it, we don't even have that. Huh? I hate it when that happens. Man, we don't have any choice picks on the healthcare sector. That means stay away. All right, let's take a look at this on the S&Ps in general. We got to have some place up here. Aha. Here we go. Gap, Under Armour, Urban Outfitters. Okay, so why am I picking these? We're trading below profiles on a weekly, but we've kind of sympathetically rallied up to the top of a profile on our daily, or actually in the vicinity of that. Okay, so Gap, we talked about looking at this, waiting for a pullback. This is not exactly the filter I was looking for to find something like this, but while we're looking at this, obviously this is, let me show you the cell structure here. There's no there's no long-term peel back happening on the weekly yet, but we talked about a close above on Gap and a retest into this 18.064. You're getting that right now. I think this stock might be a little disconnected from the market in general. Again, this is a little bit of a trading opportunity. I'm not a huge fan of buying a retail-oriented stock, but again, you've got that pullback that's happening now. Let's take a look at Under Armour. This is our daily. This is our weekly. 39.49, 38.26. Well, this is one where, I think the down move is not over on this. I'd rather see this thing rally back up into 39.49, and we may get some points up this morning since the market's gapping up. Let me see where we're at if we got a print. Yeah, we've opened up. Let me look at this on E-Signal here. UA. Okay. 38.51, is that a real print? Yes. Okay, 38.51 pre-market. Here's what we're looking at on Under Armour. I was pulling up this sort to try to figure out if we were below profiles and kind of rallying back up into an inflection point we could kind of lean on. It's really cool because I think you've got a little bit of a collection area, even though we're kind of coming up into those daily infra highs, and we've already retested this area before, this 39.49 area. This stock is obviously not the stock du jour of the stock market right now, and in my opinion, you've got a little bit of a chance to short this again on Under Armour. Let's take a look at Urban Outfitters. Interesting that all three of these are in the XLY. URBN. Here we go. All right, so again, this is kind of what we were looking for, a rally up in the gap. The GPS trade was just flagging it because it was in that vicinity at the top. This is a little bit more of an attractive situation. You got 29.84 sitting there, along with 28.64. So again, I think a decent lid. You've had, a decent rally in this stock. I mean, you could get a pullback into 26 easily. So again, not the most exciting thing in the world to go from possibly 29 and some change down to 26. But what's that? That's a 9-10% move. If you pick the battle, put the stops in, get the risk reward, 3-1, might not be a bad situation. Let's go back to the futures section. I want to look at copper really quick. This is a July contract. Here's the situation. I was kind of amazed this thing really didn't elevate any more than it did. Here's the daily. We're getting above these daily infra highs. Let's take a look at the landscape chart on copper really quick. All right, so here's kind of what it's moved through. All right, but let's go to E-Signal. This is the level of the market on copper. Let's go to E-Signal really quick. And we're going to take a look at copper when we come back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We're going to take a look at copper here. Got about 4 minutes left. And obviously some movement this morning on the upside, getting back above 209.68 on the daily. You got some more headwinds, 216.83. Not a big fan of really just piling into copper right now, even though, we've got some kind of a tug of war going on globally. I just don't see a lot of leverage there. On coffee, I just want to revisit this. Let's go down to July coffee really quick. This is something, it was disturbing that we didn't get a weekly close above 133.63 on this. Just reversed. And I still like it. I still like, if we get to these inflection points down below or get a close above 133.63, come down into 117.63, I think you've got a chance to catch a bid on this. I like the action on it. I like the lower lows. I like the higher lows on the Navigator still. I like the chance at it turning above 0 on the north side on Navigator, just like it's done in the past. That's a real strong signal. So it's a wait and see on coffee still. Still a wait and see on coffee. S&Ps, just to revisit this a little bit, gone a long way pretty quickly. breath pretty positive, but we've gotten into a major weekly inflection point here. We're eclipsing former highs. Haven't been this high week since late April. So again, might want to take some weight off if you're long here. We talked about a volatility play. I think you should be adjusting that position right now. And for a trader's opportunity, I think you've got a little bit of a short opportunity here. But again, put the stops in. Take a look at some stocks in the news really quick from yesterday. Best Buy, BBY. Not a happy situation. 30.5. Here's the weekly. Not a big fan of buying any retail-oriented stock right now. Support's going to be at 29.64 if you want to play around with that for a kind of a trading bounce. But again, we're not there yet, and the market might not allow that to go down. AZO, AutoZone. Let's take a look at this one. Wow, 767. Pre-market, is that true? Yes, no. That's yesterday's close. So here's a weekly. Stock in the news for sure. No leverage there. No opinion. Going to take a look at HPE. We've looked at this one in the past. Again, earnings related. And CSC. $18.58. We're going to stay away from that. Intuit, INTU. It's like a utility, man, this thing. Who doesn't use QuickBooks? Whew. We use FreshBooks, actually. It's a fresher situation. So 104.20. It looks like we're trading pre-market 105.03. That's your defense area on Intuit now. Guys, you've been great. Stay tuned. I think Larry is off today, so we're going to try to either play a replay or myself or Basil will be covering for him. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.